Hello traders, welcome back to the Forex Geek channel, and I especially welcome you to this particular video. All right, understanding who is behind the moves on your chart changes everything. The volume open interest footprint indicator trading strategy gives you the tools to see deeper than candles into actual buyer and seller behavior. All right, now let's just add the indicator to the chart real quick. The volume open interest, right? The volume open interest footprint indicator. Okay. Okay, I'm just going to add it to this chart. Okay, it seems like the indicator, this particular version of the indicator, seems to be selective. Okay, I think I was wrong. Now, if you understand what just happened right now, I was seeing BTC USD, BTC USD, BTC USD, and initially I was not seeing anything on the chart, so I had to go to BTC USD just to confirm if this indicator works only on BTC USD. But I think we can both confirm that it is not only on BTC USD that it works, right? So let's just go to the settings of this indicator and know what all those BTC USD are for. Now, okay, this is for aggregate volume, chart pair. All right, if you tick on this, okay, so perhaps if you want to use it for maybe the BTC USD perpetual on Binance, you can tick on this. Perhaps if you want to use it for this, you tick on this. Okay, so we're just going to leave it on this chart pair since we are just using our foreign currency pair. All right, so since we're using our currency pair euro USD, we're just going to leave this one ticked. Okay, so I think we are good to go. Yeah, we are good to go. All right, now let us break it down. Okay, volume shows how much is being traded. Open interest shows how many positions are open, helping track whether new money is entering or if old positions are being closed. Now, footprint charts break each candle down to show executed trades at each price level, letting you see who is in control, buyers or sellers. Right? Now, when used together, these three reveal intent, strength, and market manipulation. All right. So now in a footprint chart, you look for volume clusters, right? These are high activity price levels. If volume is high, price is rising, but open interest is falling. So it may be a trap or exit liquidity. Then if price rises, volume rises, and open interest also rises, that is a sign of genuine conviction and potential continuation. All right. Also, you should be looking for imbalances. If bid volume is much higher, than ask volume, or vice versa, it signals aggressive pressure from one side. So here's how to apply it, right? You should choose a session. Okay, you should actually choose a session, whether it's London or the New York Open for high activity, right? Then you should mark your key support and resistance zones, your supply and demand zones. Actually, you should mark these important zones on your chart. Okay, these are important zones that need to be always marked on your chart. All right. Support and resistance zones play a key role, very important role, that you should not neglect them. Okay? Now, you watch the footprint chart as price approaches these zones. Confirm with volume and open interest, right? Rising OI plus high buy volume is equal to strong buy interest. All right? Equals to strong buy interest. And when you have falling OI, that's OI represents open interest. Falling OI with high sell volume is equals to exit move or weak sell. All right, then you wait for absorption signals or imbalance clusters to enter. Use stop loss just outside the zone and manage based on footprint data. Now, one of the biggest advantages of this strategy is trap detection. Okay, if you see a big green candle, with massive volume, right? If you see a big green candle with massive volume, but open interest drops, that is someone getting out while others are buying. So these are liquidity grabs, right? With this strategy, you can filter these traps and stay aligned with real market behavior. Okay, you should also pay attention to your risk management and your risk tolerance. Do not trade with an amount you cannot afford to lose. That is very important. And then you should not risk more than 1 to 2% of your account balance in a single trade. Right? There is no guarantee that the trade is going to go as you expect. So why should you be risking a huge percentage of your account balance in just one trade? And then pay attention to your risk to reward ratios as well. All right? Pay attention to your risk to reward ratios. If you enter a trade and you set your stop loss below the recent swing low, that's for a buy trade, ensure that you have a minimum of 1:2, your risk to reward ratio. So your potential profit should be at least times 2 of what you are risking. So that's what we call risk to reward ratio. Okay, so basically, once you have all your risk management practices, in place accordingly, then you should, pay attention to the technical aspects of your strategy as well, and you are good to go. So that's the volume open interest footprint indicator trading strategy, a high precision data driven method that puts you one step ahead. If you want more content like this, hit the like button and subscribe to the channel to stay on top of real market edge strategies. Trade smart, watch what the market does, not what it says. See you in the next video.